Now, the NSE All share index gained 0.6% today, ending the week on a positive note. Baba Ibrahim, Managing Director of Mainstreet Bank Securities, joins me in the studio to review trading this week. Thank you so much, Baba, for taking the time out to join us. It's been a rather topsy-turvy week. We've seen choppy trading, but good thing the market ended on a positive note. How would you describe what the trading patterns and strategies have been this week?
Yes, quite clearly. I think what we've actually seen in the past week, up till this present day, is the fact that a lot of investors are actually being very cautious and very wary as to what the next, the blueprint of the incoming government is likely going to be. Yeah, so I think on the basis of that, we've seen investors, trying to really stay action pending when that actually comes to light. Well,
is that what we're going to? Because I've asked, that's pretty much what we've talked about since Monday, and we didn't see the blueprint. Now there's talk about that the blueprint could come in the next 2 weeks, could come in 3 weeks, but the truth is nobody knows exactly when it's going to come, especially when we have the president focusing on security, outside of the country at the moment, talking to your neighboring president on how to curb the insurgency. So is this what we're going to see again next week, pending when we see this elusive blueprint?
Yeah, I think from time to time you will get to get to hear of the likely direction the government is going to take. People have actually said that the government is going to go lean in terms of its cabinet. Yeah, and those are positive signals for the market watchers. Yeah, but forming a cabinet at this critical point in time is not really going to be on an auto run. Yeah, he has to take his time to put these things in place, because it's going to be working with them for the next 4 years, and you don't have to make mistakes. So I think it is better to get it right than trying to meet the yearnings of people in terms of getting it done quickly and making mistakes. I think Nigeria has to be a little bit patient so that we can get it right in terms of the caliber of people that are going to form the cabinet, and that will be leading to have momentum into the economy and the financial space.
Okay, I suppose the waiting game will continue in the new trading week. But let's talk about sectors or stocks that rallied this week that investors took shelter in. I suppose there was also cherry picking this week.
Yeah, I think the market has actually seen some good time as well as bad time. Good time in the sense the fact that we've seen some stocks trading pretty low. And investors that are actually smart and discerning knows when some stocks actually go, hitting their rock bottom. For instance, we've seen GTB. GTB has always been on 29.30, and GTB coming down to 26.27. I think for very, very smart investors, I think they think it's about time they get into it, and that's what you're saying. The same goes for Zenith Bank. Zenith Bank has actually been trending well above 23, 24 in the past 3-4 months. We've seen Zenith Bank consistently coming down to level 19. 20, so I think it's quite interesting that we're seeing those kind of market outplay coming out.
Okay, well, talking about the news coming out, there's one news that came out today from the NSE authorities, but it's been done by the Securities and Exchange Commission, approving a new pricing rule that will remove the stopgap that supported several stocks at the NSE at the 50 kobo nominal value. Now, if this happens, I mean, we hear market analysts say that up to 50% of the stocks at the NSE could actually be affected. We could actually see them dropping significantly. Just talk to us how this could impact the market and those stocks for you that come to mind that you think would be hit. Yeah,
I think quite clearly the argument is neither there nor there, because if looking at it from the investor's point of view, most of these investors actually locked in most of the stocks. They can get their investment out. We're talking about nominal price of 50 kobo. Yeah, and I think it's our time we see a clear-cut direction as to whether it's going to benefit the investors or it's going to benefit the markets. We need to strike a balance as to how that plays out. But to my mind and to my thinking, I think the appropriate thing to do is to allow the markets to take its toll. Yeah, because if I have my investment lock-in and even at 50 kobo nominal value, I can get value for that stock. I think it's only natural that you allow the market dynamics to determine the direction the market is going to go. And that to my mind makes better sense. But beyond that, I don't think that the market will be really worse off in terms of the market cap. Yeah, most of the stocks actually fall within the rhythm of the 50 kobo nominal value are actually mostly insurance sector stocks, and these are the width on the entire market cap is less than 2%, 3%. So the impact on the market, as it were, will not be really felt in terms of the general market, capitalization as well as the NSI. But I think that it is important that we strike a balance as to how best this can be accommodated, so that it's going to be a win-win situation for both the shareholders, investors, as well as the market, in the bigger picture. But I think it's an issue that has to be addressed so that we can move forward.
Okay, I mean, we have institutional investors who this could benefit, but for the less sophisticated investors who are still trying to grasp, make sense of the market dynamics, in terms of perception, how would they view this if they see stocks trading at 1 kobo, 2 kobo? Doesn't that create some kind of impression that, okay, these are stocks that we need to stay away from, they're not doing well, that's why they're at the bottom, even though, I mean, if you look at the fundamentals, that's actually the case.
Yeah, I think just like you just pointed out, most times the key investors actually look at track record, dividend policies of most of these companies. Yeah, most of these stocks that are at nominal value, have they paid dividend in the past 4 years? No. In other exchanges, we've seen stocks, going below even their nominal value. So I don't think it's really out of place, for the international investors to look at it in negative context. I think that, it should be seen in the context of the fact that the market should determine where the share price should move to. Yeah, that's key to me. Yeah, and once that happens, on its own, the market will find its rhythm. Once the fundamental of the stock begin to pick up in terms of corporate governance, performance, and all that. So I think that, like I said again, the argument is neither there nor there, but a proper balance has to be, struck so that we can move the market forward.
Now, I mean, in sophisticated markets, we talk about large cap, mid caps, but there's always room for penny stocks. Yeah. Where a couple of investors look at some penny stocks that still have a future, have good fundamentals.
Absolutely.
Do we have penny stocks? Because many of the stocks will fall into that category going forward. If the rule is cemented, do we have penny stocks? Any come to mind for you that investors can look to, or for now it's just going to be trading in liquid stocks, the market bellwethers such as the banks? Yeah.
I think there are quite a number of penny stocks, in the bars right now. Livestock, was in the category of penny stock before the new management came in, and they turned around the company. So from time to time, you will see some low cap stock moving to medium cap stock based on performance and management buyout, acquisition, and all that. The important test is the fact that this company should be properly run, and they should be able to generate reasonable return for the shareholders as well as investors.
Apart from being properly run, I mean, to be fair to these companies, many times it's the harsh business environment that doesn't allow them to expand.
Absolutely. But in the same vein, you've seen that some other companies in the same sectors actually are performing. You need to be able to think outside the box, to be able to outperform not only the market, but the sector you're operating in. So I don't think that argument should hold water by and large. You must be able to see how you can beat the markets, and that's what makes you a star winner. Yeah. So beyond that, I think that the key test as to the fact that the economy is pretty harsh, no doubt about that. But you must be able to see how you can get around that and move your business forward. I mean, you shouldn't be making excuses to say, look, cost of diesel is high. The same way cost of diesel affects company A, it affects company B. So why are you lagging behind when the company C is moving on? So those arguments, sincerely speaking, may not hold water. The bottom line is that you must run your company as sound, as profitable as possible, so that you can have confidence of investors.
Okay, we'll leave it there. Thank you so much, Baba, for sharing your thoughts and perspective on market trading this week. Baba Ibrahim, the Managing Director at Mainstreet Bank Securities.